My name is Daniel O'Connor. I'm 40 years old. And until 3 years ago, I was the Chief Financial Officer of O'Connor Brothers Construction, a company my father built from nothing in Buffalo, New York. Today, I want to tell you about how my older brother tried to steal our family legacy, and how the IRS became my silent partner in the most satisfying revenge I've ever witnessed. If you enjoy stories of cold-blooded revenge and gripping plot twists like this video, and subscribe to the channel now. There are brand new, unreleased stories here every day, each one more intense than the last. Growing up, Michael and I were inseparable. He was 5 years older, the natural-born salesman with our father's charisma and gift for closing deals. I was the quiet one, the kid who actually enjoyed math class and spent summers learning QuickBooks instead of playing baseball. While Michael charmed clients at job sites, I was in the back office making sure we had the cash flow to pay our subcontractors on time and the documentation to keep the state inspectors happy. Our father, Patrick O'Connor, immigrated from County Cork in 1978 with $200 and a toolbox. By the time I graduated from SUNY Buffalo with my accounting degree in 2006, he'd turned that toolbox into a $15 million annual revenue construction company. We specialized in commercial renovation projects throughout Western New York, office buildings, shopping centers, medical facilities. Nothing glamorous, but steady work that kept 43 families fed. Dad always said the same thing. Michael brings in the business, Danny keeps us honest. And that's exactly how it worked for 15 years. Michael would wine and dine potential clients at the Buffalo Athletic Club, play golf at the Country Club of Buffalo, and close deals over steaks at Russell's Steaks. I'd run the numbers, structure the contracts, manage our relationships with suppliers like Sherwin-Williams and Home Depot, and make sure every invoice matched every purchase order down to the last screw. The balance worked perfectly. Michael understood people. I understood money. He could convince a client to upgrade their flooring specifications. I could tell you exactly how much that upgrade would cost, and whether we'd still hit our 18% profit margin. Dad trusted us both completely, and we never gave him a reason not to. When Dad suffered his heart attack at the job site in February 2022, everything changed overnight. He was 68, still climbing scaffolding and checking every corner joint personally. The paramedic said he was gone before he hit the ground. Irish Catholic funeral, half of Buffalo showed up, and Michael gave a speech that had grown men crying into their Guinness at the wake. The will was straightforward. Michael and I each inherited 50% of O'Connor Brothers Construction. Equal partners, just like Dad had always promised. Michael got the title of President and CEO, which made sense since he'd been handling client relationships for years. I remained CFO, continuing to manage the financial operations, vendor relationships, and regulatory compliance that had always been my domain. For the first 6 months after the funeral, everything seemed normal. Michael stepped into Dad's role naturally, attending Chamber of Commerce meetings and maintaining our relationships with general contractors like Turner Construction and Gilbane Building Company. I kept the books balanced and the cash flowing. Our revenue stayed steady at around $15 million annually. We maintained our A+ rating with the Better Business Bureau, and our bonding capacity with Liberty Mutual remained solid. But by September 2022, I started noticing things that didn't add up. Small things at first: purchase orders for materials that seemed inflated, invoices from suppliers I'd never heard of, and wire transfers to accounts that weren't in our standard vendor database. When you've been managing the same books for 15 years, you develop an instinct for irregularities. It's like a musician hearing an off-key note in a symphony. The first red flag was a series of payments to Empire State Building Services, allegedly for specialized concrete work on the Roswell Park Cancer Institute expansion project. The invoices looked professional enough, but something felt wrong. I'd personally negotiated our concrete subcontracts with Upstate Concrete for that job, and these new invoices didn't match our project specifications or pricing structure. I pulled the bank statements for our main operating account at KeyBank. 3 transfers to Empire State Building Services, each for $47,000, all approved with Michael's signature. When I cross-referenced these against our project budgets, they didn't appear anywhere. It was as if someone had simply decided we needed to pay an extra $141,000 for work that either never happened or was already covered by our existing subcontracts. "Michael," I said during our monthly reconciliation meeting, "can you help me understand these Empire State invoices? I can't find the corresponding work orders." He barely looked up from his phone. "Danny, you worry too much about paperwork. Sometimes we need to bring in specialists for specific jobs." Dad understood that. He trusted his partners to make operational decisions. "Dad also taught us to document everything," I replied. "The state audits our prevailing wage compliance annually, and these payments aren't categorized properly." Michael's expression hardened. "Look, little brother, I'm running the business side now. You handle the accounting. Stay in your lane." That phrase, "stay in your lane," that's when I knew something was seriously wrong. Dad had raised us to question everything, to double-check each other's work as a safeguard against mistakes. Michael's dismissiveness wasn't just unprofessional, it was completely contrary to how we'd operated for 2 decades. Over the next 4 weeks, I conducted what I privately called forensic reconciliation. I compared every bank statement against our accounts payable records, cross-referenced every vendor payment against our master supplier database, and reviewed every wire transfer authorization. What I discovered was systematic financial fraud on a scale that took my breath away. Michael had created a network of shell companies: Empire State Building Services, Northeastern Supply Solutions, Atlantic Coast Consulting, all with addresses that traced back to UPS store mailboxes in Albany and Rochester. He'd been funneling company funds through these fake vendors, then moving the money into personal accounts. The pattern was sophisticated enough to avoid triggering automatic bank fraud alerts, but sloppy enough that anyone with forensic accounting experience could unravel it. The deeper I dug, the more brazen the scheme became. He'd forged my signature on internal authorization forms, claiming I'd approved purchases that I'd never seen. He'd altered supplier invoices, inflating legitimate costs and pocketing the difference. Most audaciously, he'd started transferring company assets, trucks, equipment, even our office building, into personal holding companies that he controlled. The breaking point came on a Tuesday in October. I was reviewing our quarterly tax filings when I noticed that our depreciation schedules were completely wrong. According to our books, we'd somehow sold $380,000 worth of construction equipment to a company called MO Holdings LLC for exactly $1. When I researched the company registration with the New York Secretary of State, the managing member was listed as Michael Owen O'Connor, his full legal name. I printed everything: bank statements, forged authorizations, altered invoices, corporate filings, asset transfer documents. The evidence filled 2 bankers' boxes. Then I did something that surprised even myself. I walked into Michael's office and placed my resignation letter on his desk without saying a word. "What's this?" he asked, finally looking up from his computer. "I'm done," I said calmly. "Done with what? The monthly reports? We can hire someone. Done with this company. Done pretending that what you're doing is legitimate business." For just a moment, his confident facade cracked. I saw a flash of genuine fear in his eyes. Then he recovered, leaning back in his chair with that same arrogant smirk he'd perfected in high school. "Danny, you never were a real businessman," he said. "You just did the books. Dad knew it, I know it, and deep down you know it too. This company needs someone who understands that sometimes you have to bend the rules to stay competitive." I nodded slowly. "You're absolutely right, Michael. I was never a businessman. I was just an accountant who happened to care about our father's reputation." I walked out that afternoon and never returned. But I took those 2 bankers' boxes with me. The next 3 months were the most methodical period of my life. While Michael probably assumed I was licking my wounds or looking for another accounting job, I was building the most comprehensive fraud case I'd ever assembled. I rented a small office space in Amherst, away from our usual business district, and transformed it into what looked like a detective's investigation room. I contacted Margaret Chen, a forensic accountant I'd worked with during a previous insurance audit. Margaret specialized in white-collar fraud cases and had testified as an expert witness in federal court more than 30 times. When I explained what I'd discovered, her first response was a low whistle. "Daniel, this isn't just embezzlement," she said after reviewing my preliminary documentation. "This is sophisticated tax evasion, mail fraud, and wire fraud. We're talking federal charges here." "I need everything documented properly," I told her. "Chain of custody, authenticated copies, expert analysis, the whole 9 yards." Margaret and her team spent 6 weeks reconstructing Michael's scheme. They traced the shell companies through multiple layers of incorporation, identified the specific bank accounts where the money ultimately landed, and calculated the total amount stolen, $2.3 million over 18 months. More importantly, they determined that Michael had failed to report any of this income on his personal tax returns, creating a massive liability with the IRS. While Margaret handled the forensic analysis, I focused on preserving relationships that Michael had taken for granted. I reached out to our key suppliers and subcontractors, explaining that I was starting a new venture and would be interested in maintaining our professional relationships. I didn't mention the fraud. That would have been premature, but I planted seeds for the future. Tony Castellano from Upstate Concrete was the first to express interest. "Danny, you were always the guy who made sure we got paid on time," he said during our lunch at Anchor Bar. "Whatever you're planning, count us in. Michael's been difficult lately. 3 different suppliers have put O'Connor Brothers on credit hold because of late payments." That information was gold. Michael's fraud was already creating operational problems that were damaging the company's reputation. I documented every conversation, every complaint about late payments, every instance of suppliers questioning the company's financial stability. In December 2022, I filed my complaint with the IRS Criminal Investigation Division. This wasn't a simple tax dispute. It was a referral for criminal prosecution. I submitted Margaret's forensic analysis, copies of all fraudulent documents, bank records showing the movement of funds, and a detailed timeline of Michael's activities. I also provided evidence of the tax evasion, calculating that Michael owed approximately $690,000 in unpaid federal taxes, plus penalties and interest. The IRS doesn't move quickly, but when they move, they're thorough. Special Agent Rebecca Martinez contacted me in January 2023 to schedule an interview. We met at the federal building in downtown Buffalo, where I spent 4 hours walking through every detail of Michael's scheme. "Mr. O'Connor," Agent Martinez said, "I've been investigating financial crimes for 12 years, and this is one of the most well-documented cases I've ever received. Your brother made 2 critical mistakes. He stole too much money, and he picked the wrong person to steal from." While the IRS investigation proceeded quietly, I launched O'Connor Construction Services from a small office in Clarence. The name was deliberate, similar enough to invoke our family's reputation, different enough to establish my independence. I obtained my general contractor's license, secured bonding through Travelers Insurance, and began rebuilding the business exactly the way Dad had envisioned it. My first contract came through Tony Castellano, who recommended me for a medical office renovation in Cheektowaga. The job was small, $125,000, but I completed it 2 days early and $3,000 under budget. Word spread quickly through Buffalo's tight-knit construction community. By March 2023, I had 4 active projects and a waiting list of potential clients. The irony wasn't lost on me. While Michael was bleeding money through his fraudulent schemes and struggling to maintain basic supplier relationships, I was building a legitimate company based on the principles Dad had taught us: fair pricing, quality work, and absolute honesty in all financial dealings. Throughout this period, I maintained complete silence about the IRS investigation. I didn't confide in friends, didn't post cryptic messages on social media, didn't even tell my wife Sarah the full extent of what I'd discovered. The only people who knew the complete story were Margaret Chen and Agent Martinez. In April 2023, I learned through industry contacts that O'Connor Brothers Construction had lost 3 major contracts due to bonding issues. When a construction company can't maintain adequate bonding, It signals serious financial problems to potential clients. Michael's fraud was creating exactly the kind of operational chaos that destroys businesses from within. The final piece of my strategy involved patience, something Michael had never learned to value. While he continued to believe he'd outsmarted his accountant brother, I was methodically building the infrastructure that would allow me to absorb his best clients and suppliers when his world inevitably collapsed. I wasn't seeking revenge in the traditional sense. I was simply positioning myself to survive and prosper when the natural consequences of his actions finally caught up with him. The call came on a Thursday morning in June 2023. Agent Martinez's voice was professionally neutral, but I could hear the satisfaction underneath. Mr. O'Connor, I wanted to inform you that we've concluded our investigation. The U.S. Attorney's Office will be filing federal charges against your brother next week. We'll need you to be available for testimony when this goes to trial. What charges exactly? I asked, though I already knew the answer. Wire fraud, mail fraud, tax evasion, and conspiracy to commit fraud. The total exposure is approximately $2.8 million when you include penalties and interest. His assets have been frozen pending resolution. I hung up and sat in my office for 10 minutes, staring out at the construction crew working on our latest project, a $400,000 renovation of a pediatric clinic in Williamsville. In the distance, I could see the O'Connor brothers' construction yard, where several pieces of equipment sat idle behind a chain-link fence. The news broke 3 days later in the Buffalo Business First. Local construction executive charged in $2.3 million fraud scheme. The article detailed how Michael had systematically looted the family business through shell companies and forged documents. It mentioned that the IRS had frozen his personal and business assets, and that several suppliers had filed liens against O'Connor Brothers Construction for unpaid invoices. My phone started ringing immediately. The first call was from Jennifer Walsh at Roswell Park Cancer Institute. "Danny, we heard about the situation with your brother's company," she said. "We have a $1.2 million expansion project that was supposed to start next month. Would O'Connor Construction Services be interested in submitting a bid?" "I'd be honored to bid on it," I replied. "I'll have a proposal to you by Friday." Over the next 2 weeks, I received similar calls from 8 other clients who had worked with the original company. They weren't just offering me work, they were actively distancing themselves from Michael's tainted operation. The Buffalo construction community is small and tight-knit. When word spreads that someone has violated the fundamental trust that makes business relationships possible, the exile is swift and permanent. Michael's legal troubles accelerated quickly. His attorney, presumably paid from whatever assets the IRS hadn't frozen, tried to negotiate a plea deal. But federal prosecutors don't typically show mercy for sophisticated fraud schemes, especially when the defendant has shown no remorse and made no effort to make restitution. The trial lasted 3 weeks in October 2023. I testified for 2 days, walking the jury through the forensic evidence Margaret and I had compiled. Michael's defense attorney tried to portray him as a grieving son who had made poor business decisions under stress, but the documentation was too comprehensive to dismiss as mere incompetence. The jury deliberated for 6 hours, guilty on all counts. Michael received 4 years in federal prison, 3 years of supervised probation, and was ordered to pay $2.8 million in restitution. The judge specifically noted that the defendant had violated a sacred trust by stealing from a family business built by his deceased father. I wasn't in the courtroom when the sentence was read. I was at a job site in East Aurora, overseeing the installation of custom millwork in a law firm's new offices. Sarah texted me the news, and I simply nodded to my foreman and continued reviewing the installation drawings. By the end of 2023, O'Connor Construction Services had 12 full-time employees and annual revenue of $3.8 million. We'd hired 6 of the best workers from the old company after Michael could no longer make payroll. Our client list included 3 hospitals, 2 school districts, and some of Buffalo's most respected architectural firms. The original O'Connor Brothers Construction was dissolved in bankruptcy court. The company Dad built with his bare hands officially ceased to exist in January 2024, but its legacy lived on in a new form, one that honored his principles instead of betraying them. I never visited Michael in prison. I never sent a letter, never accepted his collect calls, never responded to his attempts to contact me through mutual acquaintances. There was nothing to discuss. He had made his choices, and I had made mine. The most satisfying moment came in March 2024, when we broke ground on the new Buffalo Children's Hospital wing, a $15 million project that Dad had dreamed of bidding on, but never had the opportunity to pursue. As I watched the excavation begin, I thought about what he would have said about the whole situation. Probably something like, "Danny, you don't need to raise your voice when you're standing on solid ground. Michael will be released from federal prison in 2027. He'll be 52 years old, with a felony record that will prevent him from working in construction or any other licensed profession. He'll owe the IRS nearly $3 million that he'll never be able to pay. Most importantly, he'll carry the reputation of someone who stole from his own family. A scarlet letter in a community that values loyalty above all else. I didn't destroy Michael's life. He did that himself, one forged signature at a time. I simply documented the process and let the system work exactly as it was designed to work. Sometimes the most devastating revenge is just letting the truth speak for itself. If you enjoyed this story, please like this video and leave a comment telling me what you thought. And if you're not already subscribed to the channel, please subscribe and hit the notification bell to get alerts for new stories like this one. Thanks for watching, and I'll see you next time.